Well, we're back with you here on the Market Day Report. Thanks for joining us today. I appreciate that very much. Wanted to run through some numbers. I did a little work here and separated out some states that are behind average the most on their harvest activity. I thought this was kind of interesting and somewhat telling. Let's take a look at the most delayed corn harvest states. So here we have Iowa, the furthest behind, along with Minnesota, on corn harvest. So they're 12 points behind their average pace right now. North Dakota is running 12 points behind normal. South Dakota is now 10 points behind normal. And Nebraska is running 6 percentage points behind their 5-year average pace. So I thought that was kind of interesting to point that out. There's a big bullseye, in case you hadn't noticed, geographically speaking, right over the northwestern quadrant of the Corn Belt. So that's where all the delays are the most extreme. Now we have the same thing I put together on the soybean harvest delays for you, and here it's a little more scattered around. Kansas is furthest behind, 18% behind their average pace on soybean harvest. Michigan down 17 points. Iowa behind by 12 points, along with Nebraska and Wisconsin. They're all 12 points behind their average harvest pace on soybeans, although soybean harvest is much further ahead than what corn harvest is right now. Let's go to the trading floor in Chicago and welcome aboard Todd Bubba Horwitz of BubbaTrading.com to find out what's going on in the markets today. Todd, I wanted to throw those numbers out there. I thought that was a little different way to look at it anyway, to get some perspective on who's having the most problems out there.
Absolutely, Marlon. Good morning. And, you know, we're quietly holding and doing, I think, the grain markets have been very solid. You know, as we looked at those lows from a couple of weeks ago, we started to build some momentum. We built a nice little pattern. And we're now, you know, in corn, I think you'll probably see a little bit of sidewards action here. Still, I think, going higher. I think we're going to probably see 365 to 380 will come into play here soon. But again, we're going to have, you know, we're at a little bit of resistance. And I think we've had a nice move off of the bottoms and built a very solid base going forward. So I think you're going to continue to see positive action here and more new money flow into these markets, besides the fact that a lot of the guys are saying, you know what, I'm not taking these prices, I'm going to store it. And although there's buyers, there's not enough stuff for, even though there's a lot out there, there isn't enough for sale right now. So we're going to see prices probably move a little bit higher from here, and I think that's very healthy for the market. The whole pattern, the whole setup was very nice, and really the same thing in wheat. Soybeans continue in that, you know, $9.40 to $10 range. We came all the way down last week to, you know, $9.48, $9.45. Now we're back up just a little over $9.80. I think you're going to continue to see a run up here, and we're going to continue to try to trade in this range. But overall, the space looks very solid and very good right now. And I think we're going to see higher prices, as we've been talking about for the entire summer.
So are we starting to see more and more influence from what's going on in South America now with their new planning?
You know, I think that we're seeing more money flowing into the markets. I think we're seeing more new money flowing in. I think we're seeing the ability to now get positive pricing. You know, a lot of the outside noise will only have a short-term effect, but the longer-term money will always tell you what the markets are doing, and the money is telling me that the markets want to go a little bit higher from here.
Okay, let's take a look at prices here, Todd. Let's go to the corn first, and we'll pull up the big board for everybody. On the futures trade, here we have December now just one tick higher at 354.25 per bushel. March now unchanged at 364. On the soybean trade, we have November currently 5.5 higher at 983.75 now. That's a full dime off of our earlier low. January 5.75 higher per bushel at 991.75. Wheat trade, here we have Chicago December now 2.5 lower at 421.25, and in the Kansas City market here, December is unchanged at 422 even on the day. That's a little over a penny off of our high of the day. And if you look at the Minneapolis wheat trade, we're down a half cent at 528.5. And looking at the cotton market, cotton on December right now is trading just 1 point higher at 71.20. I did want to mention that we did have over 700,000 tons of soybeans sold overnight to China, and that's giving the soybeans a little extra boost as well. Todd, I'll bring you back here in a moment. We'll take a look at our livestock trade as well. A lot going on in that market here recently. We'll cover it when we come back. And we are back with you here on the Market Day Report on a Tuesday. Thanks so much for joining us today. Appreciate that. We're going to go back to Chicago, where we have Todd Bubba Horwitz standing by. He has this website that's called BubbaTrading.com. And once again, you might remind everybody what they can find on that, Todd, because it's pretty enlightening as far as information related to the markets, and it's very educational, too.
Well, we try to help, farmers and producers build a better marketing plan, but also build in some protection without ever giving away the upside, because we all know that big markets don't announce themselves when they're going to happen, but we have to be protected the downside so we can eliminate some of that forced liquidation we saw over the last couple of weeks in the cattle markets and things like that. So again, we're out there trying to help and make things better for farmers and producers and help them understand why I can say that the news really doesn't bother me, because the price will tell me what the news is long before the news gets out.
All right, and for those that may not be familiar with the work that Todd does, he does do a lot of work with young folks out there, just kind of getting their feet wet in marketing, if you will, and trying to help them learn the ropes and how to do it properly without any more risk than necessary. Todd, thanks for joining us here again. I want to take a look at the livestock trade. Let's go to the live cattle board here first. We had a pretty good rally yesterday on the cattle. We're kind of seeing that vaporize here today. We have December live cattle currently down 32. We're trading at 98.68 per hundredweight here in the live cattle. February down 55 at $100.15. We did touch $100 even and then bounced off that just a little bit. Feeder cattle trade, we'll look over there where we have November currently down 80 at 116.42. So we're about 20 cents from our low of the day. We're off our high by about $1 now, Todd. January down $1.01 at 112.52 per hundredweight. So is this pretty concerning to you that they did try to go higher and now they're selling off again here today after going higher yesterday?
No, it's not. It's actually fine. Here's the real key now, Marlon. Okay. We have to watch if we can hold the bottoms. If we start making new contract lows again, then we have not found a bottom. And we're at that key decision point right now. That a little selling is not bad. Again, I'd rather see a little bit up and down with an occasional rally to keep us above those contract lows. What I want to see is I want to see the bottom start to ascent to be going higher. And I don't want to go straight up, because you build a much better base and attract much more new money and create a better market as we get a slower ascent going up. So the key here is I don't mind the lower prices, although obviously nobody wants it because they've got to sell it. But what I want to see is hold and not make new contract lows. If we can do this for about 4 or 5 days and continue to either stay flat or move a little bit higher, I'd be very comfortable in buying and stepping into this market, because I think then we're going to go higher. That would indicate to me that the bottoms of the market are in and that it's safe to go in and buy, and that we're going to see much higher prices, because I do expect to see higher prices. But this bottom area's got to hold, and that doesn't mean all the liquidation is done, all the panic is done, and then we can get back to actually real markets again.
So you think this is a much safer move that you're seeing than just rocketing up out of here? You think that's a little better sign, actually?
Rocketing out doesn't do good for anybody. Usually that's a short covering rally that will immediately get sold and go usually lower than it was when it started. We need to have the lows hold, and if the lows hold, I think we'll be in very solid shape and have a good foundation going forward.
All right, I want to touch on the lean hog trade here as well. Let's take a look at the big board. Currently on the futures trade, we have the December contract now 20 higher at 41.80, and the February down 2 cents at 48.90 per hundredweight. This is a market that seems to be going nowhere real quickly here. Todd, your thoughts on the lean hogs? Is it basing out or not?
I like the lean hogs. I think that, again, I think that 40 and 41, those are the key levels we have to hold and maintain. If we can hold there and maintain, I think we will see a rise. Now, again, December typically a little bit quieter and a little bit towards the negative side, obviously with the low prices compared to the rest of the board. But I think that overall, technically, I think we're building a nice base and a nice bottom. We must maintain 40 to 41, otherwise we're going lower. But I do believe that this is a great spot to step in, and certainly would not be uncomfortable owning hogs at these levels. I think that the risk, if you're short, I think if you own them, you've got a much longer and a much better chance to go higher.
Very good. Thanks, Todd. Todd Bubba Horwitz with BubbaTrading.com in Chicago. That's the very latest. Hogs still flat, and cattle are doing their things.